Alrighty, traders. Good afternoon, good morning, good evening. Welcome to the evening session here as we go ahead and once again take a look and see what's going on with the market as we go ahead and dissect the market step by step each and every day to take a look and see exactly what is going on and how we should be trading it. So, traders, we're going to dive into the US dollar CAD, the CAD Swiss, and we're going to go ahead and throw in some bonus currency pairs as well as we go ahead and break down and figure out what's going on. So, with that being said, traders, I will see you right after this. All right, traders. Well, welcome back and welcome to the live show today. We're going to go ahead and take a look and see what's going on. While I'm going ahead and doing that, let me just go ahead and take a look over here as to I need to get a couple of things here put together and let me go ahead and find my YouTube channel here. There we go. And we're going to go ahead and share this out to the group. So let's go ahead and click on that right now. And I'm going to get this shared out. Oh, there we go. Just mute that there quickly. Copy and paste. Fantastic. All right. We're going to go ahead and share this information out to our students. Let's get everyone in the room this evening as we dive in. I should have done this before I got started. But of course, one thing led to the other, and I completely forgot. All right. So let's do this. Let's go ahead and post that. Drive in some details here and post that. And there we go. And let's do that. All right, traders. So I hope everyone is ready to rock and roll this morning, well, this evening, as we go ahead and dig into some details as to what's going on with the market. We're going to get definitely go ahead and dive into some trading opportunities as we look to see what the markets are really telling us in a from a pattern point of view. We saw a lot of manipulation in the market yesterday. And with that manipulation, we did pick up that we were in a manipulative move. And because we're in a manipulative move, what is our first intention? Our first intention is to say, hey, let's stand on the sideline. Let's wait and see what the market's going to do. And based on that, we can then go into a deeper market analysis and look for the reversal pattern. And it pretty much happened the way we expected. We we may have probably could have enjoyed less of a manipulative move. I know that some of you probably found it extremely stressful going through that, and I can tell you right now from experience that I know for sure that when you trade in manipulation, it does tend to be a little, what's the word I can use? Scary, especially if you are moving into a very tight margin level. We know that it can be extremely frustrating and also again extremely stressful. And I can completely understand why people would want to go ahead and just cut their losses, get the heck out of Dodge, just because it's not a comfortable sort of condition. It's not a comfortable place to be in, and so hopefully by the end of tonight, we're going to be able to, or the end of today, we're going to go ahead and set some sort of guidelines to what you should be doing and how you should be paying attention to the market. So let's go ahead and do that right now. I'm just going to go ahead and all right. So this is all right. So we got this. All right. So let's go ahead and take a look at the fundamentals out this week. Again, we are looking at a few things here that we can go ahead and pay attention to. Cash rate coming out at around about 12:30 in the morning. They're looking to keep the rates unchanged. Now that is no different to what we've been seeing with the central banks over the last sort of I would say In fact, if you look at the US tends to be a little bit slow in increasing interest rates. We spoke about that last night. But we have seen that the Aussies tend to follow suit. They tend to follow the Australian market not sorry, Australian market, the New Zealand market pretty quickly. If the Kiwis decide to go ahead and change interest rates, then we'd probably see these guys jump in here very aggressively and do the same thing. So we know that that's a factor. We know that that could be a possibility that the market's going to be looking for as we dive into these details. But very important, traders, we want to make sure that when we pay attention to these details, that we are paying attention to the technicals as well, because the technicals is what really drives the market, right? It's the technicals that drive the market, not necessarily just the fundamentals, all right? And so, as I go ahead and pay attention to the details of the technicals, I'm going to use that to define whether the market's going to go bullish or bearish. So, let's go ahead and dive into that right away, as I'm trying to get things loaded here on my YouTube channel here. And it seems to be taking its time. But let's go ahead and dive into that right now. Let's go into the before I do see some inflation expectations also coming out tomorrow evening at 11 o'clock, 11 p.m. We'll cover that tomorrow and take a look at the New Zealand pairs. But I think that all eyes on the Aussie. So we definitely want to look at the Aussie CAD as well and see if they keep the rates unchanged, what sort of direction are we expecting the market to move in as well. We'll dive into that. So let's go into here's the US dollar CAD, and as you can see right here, as I go to the daily time frame, we did have this huge manipulation right here on the top. If I go to the weekly time frame, you can see, traders, that we've got quite a bit of resistance here at the top, and that makes us believe that this pair is absolutely range bound. It's range bound, and so we want to look for the market to sort of like, um, I would say, confirm this area, that it's confirmed that it's holding. And what we're looking for right here is we're really looking for this sort of manipulation right here, because the previous day trading range created that range, and we need to see manipulation for price to move down. Now, what are we going to be looking for over the next 24 hours? What we'd like to see in the next 24 hours, we'd like to see price actually close below the daily close of today, or at least the previous day, because we've got the new day that just started, right? So we want to see price closing below that. And that is the low sitting over here. I've got an actual alert sitting over here at 137.87. And we're trading at 138.12. So I don't think it's a hard task for it to do that, but we need to see price trading below that to confirm that we're heading back down south. Now, I've got the weekly open right here, not the daily. So this is actually the daily range, the weekly range, not the daily range. So that is last week's trading. This is this week's trading right here. So if we do close below there by the end of the week, that'll mean that the next trading week is going to be bearish, which means we're expecting price to come back down to here to around about 136. All right, we've spoken about that. Now, let's go into the 4-hour time frame. Now, we're not seeing any reversal here on the 4-hour time frame. In fact, we can see here that we had accumulation. This was a manipulative move right here, and there we saw distribution. We'd like to see price take out that low to confirm that, and not just take out the low. All right, we don't just want a stop rate. We'd like to see a candle close down below right here to confirm that we're heading south. All right, we absolutely want to see that. Now, so we look at displacement. Now, if I go to the 1-hour chart right here, you can see that the 1-hour chart has actually given us a little bit of confirmation. Here is our consolidation right here. All right, price manipulates. We see a downside move. It takes out the low, which is there. This is confirming that we do have a market structure shift. This is a market structure shift right here. So which means, traders, that we have to look to see if there's any fair value gap to hold the market from going up before coming down. In fact, if it goes up, we're probably going to have to look and see where that fair value gap is sitting at. So if I go ahead and put in my charts right here, I can see a 4-hour fair value gap sitting over here. We can see price already gone ahead and tested that. Price might want to go ahead and rebalance. by filling this area right here. So we'll be watching the low right here, because if price does this, comes back in, we're probably going to go back up here towards this area there before heading back down south. So we're going to watch this real careful. I'd like to see price sweeping the lows down here. So a nice little stop rate at the bottom right here for price to continue to work its way back down, because once we start going through this liquidity down here, we're heading down to 136 and change. All right. So it's all the way back down here. You can see this is the 1 hour bottom right there. So we'll be looking for that to happen there, and we'll be looking for price to drop back to that level. Now, as I go ahead and continue to monitor the setups right here, what I'd like to look at right now is the CAD Swiss. So we got a good move right here. Now, we're also going to be looking at the Nikkei. All right, this is the index, the Japanese market right here. We want to see if we have the very similar move to what we had yesterday. And look at this. Nikkei is actually jumping up here. We had a big bullish move. We had a sort of like there were sort of rumors that we're going to see a further move to the downside of the Nikkei at the open, but it didn't happen. And the hint really was, if you actually take a look at the way the market reacted after yesterday's short, it really bounced back pretty solid. You looked at the US dollar CAD, we looked at the CAD Swiss, the Euro New Zealand dollar, same thing. We had a big manipulated move to the upside. Price then came back down again. So it wasn't that bad. Traders, just give me 1 second. Are you actually seeing my charts right now? Have I been showing my charts? I don't think I have. For some reason, my charts just disappeared off my screen. All right, maybe you can see it now. All right, let's take a look here. What will happen once we? Okay. Okay, there we go. No, all right. All right. All right. So the quick, so I apologize, guys. It's I got to bed really, really early this morning, about 4 o'clock. So I was up all night. So trust me when I make these mistakes, it happens quite often. All right. All right, you bet. It's so much easier when you can see the charts, isn't it? Right? When I go through the details and explain it, it's so much easier to be able to see the charts. So I do apologize for that. All right. So as we go ahead and continue, right? As we go ahead and continue, we see this nice little bullish move to the upside right here. We can see that it's coming off this consolidation here. If we don't take out that sell side right here, we're probably going to go back up to retest the top here, or even up to this range here. So we're probably seeing the Nikkei going to rally up a little further down south. But we do see still a draw of liquidity down here. I'm keeping an eye on that to see if that ever pays out. So let's go back to the US dollar CAD. Let me go explain again on the US dollar CAD, because I don't want you guys just thinking what's going on. I want you to see what's going on. All right, so here we go. We got the weekly time frame open here. Let me go ahead and pull off the indicators here, and you can see here we got that resistance at the top once again. All right, resistance, 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 and now we got resistance. We had a nice little spike up here. If you look at the lower time frame, here we had consolidation, right? So we had accumulation right here. We saw manipulation to the upside as it drew into that liquidity there. We got a liquidity grab, price moving to the south side of the curve. We can see that on the H1. H1 has already confirmed that we have a market structure shift, and we're working our way back down south. We are expecting price to come back down to retest this area. This area is 136, call it 135.90, 136. And then we're actually looking for price to break through that level and get down here to 132. So expecting a bigger move to the downside on the dollar. Some of you might say, no, big dog, that's not going to happen. Well, it is what it is. That's my story, and I'm going to stick to it. All right. Let's go ahead and take a look at the 4 hour right here. As I go to the 4 hour, you can see a nice little spike to the upside. There you can see that manipulation right here as the market consolidates. See manipulation right there, and this is the sweep we want to see right there. All right, we'd like to see the market raid that stop at 37.80. All right, 37.80. We want to go ahead and raid that stop right there and actually displace below. This is what we want to see. We want to see a nice displacement below, and then any sort of pushback to the upside. We'll look for fair value gaps to go ahead and look for resistance to move price further down south. All right. So there is going to be a place where the market's going to go ahead and try rebalance. I made the mistake today, in fact. I was speaking to my son Cameron. If you don't follow him already, you might want to do that. But he was he was looking at the chart this morning on futures, and there was a perfect setup, and I got in on that setup a little bit too early. In fact, I may have got in at the perfect price, but I didn't place my stop loss at the place where I should have. Kept my stop losses very tight. It was a 1 to 6 risk reward. He picked up a good trade after I did, and he was a little more patient. And the reason why he was a little bit patient, because he waited for equilibrium. All right, he waited for the market to equalize before he went ahead and sold. And so let me give you a quick rundown of what that looked like here on the 1 hour, sorry, on the 1 minute time frame. Yep, 1 minute. We trade this on the 1 minute. So let me go see here if you can see that order today. And it was around about this time. Let me see if I can put up my executions. Yeah, the execution's there. And let me see if I can find it. Huh. Not seen it? No. All right. So it happened at about. Oh, hang on. Here we go. Funny bunny. All right. There we go. So this was the setup that we had right here. So we got the market to go ahead and trade up high. Then we got price to go up high, sweep the low right here, give us a nice little pullback. We got a nice fair value gap sitting over here that caused a little bit of resistance. We had a order block sitting over here as well. It was a super cool place to go ahead and sell. And so what I did is I put my stop losses up here, right at that point there. And so what I failed to look for is equilibrium, right? Price is always going to try and equalize. Here it is right here. Here's that blue line. Look how price moves all the way back up. So what happened is if I was a little more patient and I realized that my equilibrium is a little higher right here, I would have waited for price to go ahead and manipulate it higher, come back down here. We've shown equal lows right here. Price goes ahead and actually gave us smart money reversal here between ES and NQ, and then sold off. This is where Cameron got in. He placed his stop losses actually right up here above a fair value gap right here. He had a tight stop and he rode the wave down south. So that is no different, right? In anything we trade, we want to make sure that we are patient in our setups. And so I know that these traders are anxious to want to go ahead and get in on the US dollar CAD as well as the CAD Swiss. Go ahead and add into these positions. We've got to be patient. All right. Some of you might be seeing this and saying, hey, big dog, we're heading south. We may not. If the market doesn't sweep these lows, we could come back and take out the high, retest this fair value gap before selling off. So I don't want anyone to start breaking out the champagne quite yet. All right. We're going to let the market take its toll, right? We're going to let it do what it needs to do. We want to see price go ahead and sweep the lows right here and then trade below it. All right. If I go to the daily time frame and I go ahead and pull this up on the daily time frame, we can see how important this level is because it looks like we have the weekly lows sitting over here at this point. And so because that's a weekly low of the previous move, we want to be patient and see if price can sweep below there. That's going to give the confirmation we need in order to want to continue to sell. And we've got ample room for price to move down here. If you're looking over here, this is going to be around about let's say by the time it pulls back, we're probably going to get in around about 3,800, right, on the pullback. And we look for price down to move down to around about 36. So we've got about a 200 pip opportunity where we can go ahead and ride the wave on these pullbacks going back down south. So be patient. Don't be hasty. And then also keep it in mind that we have got a lot of liquidity down here that we're looking for price to move to as well. We're going to wait for that to happen. So I don't want to get ahead of myself. I tend to sometimes do that. And let me do this. Let me just take us one step at a time, right? One step at a time. And let's go ahead and wait first for the market to sweep the low of the weekly range and then trade below that fair value gap here on the daily. And once we get that, then we can start talking about re-entries. All right, let's go to the CAD. There's a CAD Swiss right here. And again, looking at a nice little pushback of that spike right here. We had a nice little spike to the downside right here. We're looking for price to move back up here to the top side. And the gain traders, let's talk about the bigger model. All right, as a quick sort of breakdown. Here is the weekly time frame. Remember, this is the model we're looking at right here. We got accumulation. In fact, you know what, traders? Let me do this. Do I have this actually on the chart? No, not quite. All right. Well, I'm using this right here. So we're going to use this model right here. We got this larger consolidation right there. All right. Larger consolidation. Here is manipulation. We know that there's nothing on the left-hand side we can use. So we're really at the mercy of the market right here. And we at this point, we want to look for reversals. This is the weekly time frame. So the weekly time frame saying, hey, we got to take out this high right here. That's all the way there at at 6,800. So when price starts coming back up again, guess what the draw is? The draw is 6,800 on the weekly. That's our external draw is 6,800. So we're going to pay attention to that. That is definitely going to be our liquidity draw on the base of the weekly. We have here these levels: 66.32, 67.18, and then of course ultimately we're looking for price to go to this area right about here, and that's at 6,800. This is where things really started working into a range as well. See how price moved over here. We had a little bit of manipulation right here. Price failed to take out that liquidity there, and because of that, all right, because of that, we saw price heading back down south. When price moves into a range and it doesn't take out that liquidity, this should be a red flag there. Should be a red flag. All right. Now, if you're saying, well, big dog, why didn't you pick it up? Exactly. Why didn't I not pick it up? And no, I did not pick it up. And I was so sort of focused in on this area right here. I failed to actually look at the internal structure, and the internal structure showed this. So I looked at this, and I'll be honest with you, I did have a little bit of a glimpse on this when price started breaking through. And I looked at it and I said, you know what? We've got support coming over here. I'm seeing this as just sell side manipulation. And then when price bounced back up here, I was almost convinced that this is the move that we're looking for in order for price to take out this high and sweep towards that liquidity high right there. Of course, price didn't, and it went back down south right here. So traders, once again, we got to get through this area. All right, we got to get through that area at 6,300. All right, there it is there. And then we've got to get through this area to get to 6,600. Now, the question here is, when are we going to start adding in on the CAD Swiss? Traders, I am going to pay a lot of attention to the larger time frame right here based on this liquidity areas. But I'm going to go down to the 4-hour time frame. And I'm going to use the 4-hour time frame to confirm liquidity. I'd like to see the market take out the highs. So here we go. All right. There's the liquidity high right there at 64.11. I would love to see that. I'd also like to see the market break above this fair value gap here. So we've got a fair value gap, and I believe it is the daily fair value gap. Let's see if I'm right. I'll pull it back up again. And yes, it is. We've got a huge insufficiency right here. And this is what we got to get above. This is going to be key right here. All right. We got to get above here, which is around about 62.85. So if we get to 6,300 and we break above that level and we stay above that level on the close, then we're absolutely going to be seeing price continue to move bullish. So traders, this is probably the most difficult time right now. All right, for a lot of traders, because we've got to get through that level. And if we do get through that level, we're going to be on the way. We're going to be on our way towards our profit targets to the upside. Now, I just want to mention something for those that took a beating, the CAD Swiss, and your account took a beating. I want to let you know that in the next couple of days, I'll be releasing and talking about a program called Project or Operation Recovery. where we're going to have a program put together that's going to help you to be able to recover your losses that you took on the CAD Swiss or any pair that you've gone ahead and traded over the last couple of months. So we're going to go ahead and I'm going to go ahead and talk about that a little bit more in the next couple of weeks. Operation Recovery. This is going to be, I spoke to a couple of students. I've taken a couple of beatings on some of my managed accounts. And so what I'm going to be doing is building out this program as to how I'm going to recover from this move yesterday that we had to go in and shave off. And what I'm going to do here is I'm going to build out exactly what it is that we need to do in order to be able to recover, whether it's a 3-month recovery, 6-month recovery, 12-month recovery. We're going to build it out and we're going to show exactly what we do and how we do it. So we're going to put a program together. We're going to get that information out to you guys in a couple of days. So by let's say, by let's say Wednesday, all right. By Wednesday, we should have something that I'll be able to talk to you about. Okay. Now I just seen here that the that the nickel has gone ahead and Nikkei has gone ahead and jumped up again. We've seen it breaking through some alerts that I've gone ahead and set here, so that's great. And that would mean that we're going to see a little bit of a pump here. I'd like to see the market continue to pump higher above 62.83. So something worth paying attention to. Of course, we're still trying to create the Asian high and low of the day. So we'll see how that all plays out. But this is a good start to the trading session after that long week right here. Of course, we've got a lot of work still to go. If this is going to be 62 coming up, then we need price to move another 200 pips to get to this level. And as you can see right here, we have this huge fair value gap sitting right here that we got to get through. We got to get through this and get onto the other side at 6,300. And when we get above that, look at that. We've got another fair value gap sitting over here. That's also going to be something that we have to get above. If we get above that and get to that 6,400, then we're on track to move to the next level. So traders, it's not going to be a smooth ride. It's going to be a little bit of a tough one to get through this. But if we do break through this pretty easy, then I have no doubt in my mind that 66, 67, 68, and even 72 is a play to the upside, and that'll be the draw of liquidity that we're looking for. Okay? But again, traders, let's not count our chickens before they hatch. We know that the eggs can break, so let's go ahead and wait for them to wait and develop, all right, before we go ahead and talk about these setups, all right? All right, now let's go ahead and talk about, let's just go talk about a couple of pairs right here. And I mentioned the euro, I think I mentioned the euro New Zealand dollar. And you'll see the same sort of manipulation right here. Look at that, all right? So we see how price can manipulate really easy. And just imagine the traders that took on the short right here and felt like they were pretty much in control. And then what ended up happening? Boom, manipulation right here, stop hunt, and price moves back down south again. So the question I believe that many have is, where is the euro New Zealand dollar going? Is there an opportunity to go ahead and trade that? Well, let's go ahead and start off with the basics. And the basics is simply this. Where are we inside structure? Are we inside manipulation, distribution, accumulation? First, figure that out, traders. And if I look over here, we can see here that we do have a sweep of the high, all right? And FYI, notice how the market doesn't sweep the high, but then eventually drops back down and then sweeps the high, taking out this buy side right here. Very big, all right? Now, Brian says, what would be the catalyst to move this pair to the upside? I have a hard time seeing the CAD Swiss getting weak in this environment. Okay, so you have a hard time believing that the CAD itself can get weak. So what could be the catalyst? What could weaken the Swiss franc? Okay, could it be that money moves out of safe haven and moves into stock markets? All right, that would be one. All right, anytime we have a risk on appetite, risk on, we get money flowing out of cash into stock. That would be one. Another would be if, of course, the Swiss National Bank do a soft intervention, because remember, the Swiss don't want a strong currency. It's not good for the economy. They're trying to recover themselves. They're trying to create a sort of outside currency, and the only way to do that is not to have a strong currency. Nobody wants a strong currency, right? Nobody wants strong currency. They want a balanced currency. I mean, we all want balanced lives too, right? So they want a balanced currency, which is not strong, not weak. But right now, too strong is not good. And so there might be sort of verbal intervention of saying, hey, we don't want the euro to get to a certain level. We don't want the Aussie CAD. And normally it's the euro Swiss. That's not what they look at most, even though it's not pegged. But it's like those are the things that they may pay attention to. We know that the bank, the Swiss National Bank, has cut interest rates, I believe, twice already. Let's take a look over here, and we can take a look at where the next meeting's coming up. So here we go. There they did cut. The next meeting's coming up on the 26th. Let's go take a look at the 26th right here. You can see that they went ahead in June. Let's go all the way down here. So they started to raise interest rates, and they got to 1.75, and they kept it at 1.75. They didn't change. They expected to raise it, but they kept it unchanged. Then they kept it unchanged. Then they started cutting one. They cut two. So we've had two cuts so far after they rose interest rates to 175. I mean, all the central banks are doing that, right? But now they've gone ahead and cut it to 1.25. Now the question is the central bank going to cut again? We don't have any consensus on the board at the moment right now, but the 26th of September is going to be an important day. All right, it's going to be an important day, and it's not necessarily what they do, Brian, that makes the pair move. It's what they say they're going to do. Right? What they do would be the after effect, of course, what happens, or the immediate effect that happens. But it's what they say creates rumors, it creates concern, it creates fear, it creates all these things, maybe even excitement about what they're going to do, not necessarily what they're doing. So we'll have to wait and see how this all plays out. Now, again, the one thing that we can trust is technical analysis. If I go back to the CAD Swiss, just because Brian brought that up, let me go back to the CAD Swiss right here. I want to point out something right here as well. Take a look right here. If I go ahead and remove, and I'll take a look at this and on the daily. Look at the daily right here. Every time price goes overboard, what happens? We see a sell-off. Every time the market goes to oversold, we see a rally. It goes oversold, we see a small rally, and then it goes extreme oversold right here, and we have a strong rally. Then it goes back to overbought right here. What do we see? We see a sell-off, right? Has a little bit of a dip. Then it goes back up here. We have double tops sitting over here. Or we have double mounts. I call them double mounts really, because we have a flat right here and we have double mounts. So we've got a double mount right here. Price dips. All right. Price goes up here. Price dips. Price goes down here. Price rallies. Price goes up here. Price dips. So where are we now? We're at a U-turn. We should be expecting price to rally. Now, granted, can price go like this and come down, retest, and then go north? Yes, it can. Okay, it can. All right, and this is the reason why we got to get above fair value gaps. If we can get above insufficiency and stay above that, maybe just retest it and go off again, that would give us a little bit of insight or a little bit of confidence that we could see price moving up higher. So yes, there's a lot of things we need to get through before we can continue, before we can really get excited about the possible price move up. Okay. Again, we're going to pay a little bit more attention to what's going on here on the chart. Now, and this is the one thing that we have to understand too, right? We have to understand that price moves to liquidity. And when it shows internal structure going bullish, and we're on the buy side of the curve, if we're on the buy side of the curve, which means we've had reversal and we're looking for price to continue to move up, we're looking for a draw of liquidity. All right, that's what we do. Anytime we're on the buy side of the curve, we're looking for bullish buy side. All right, or this bullish confirmation. So these are the things that are important here as a trader. We have to pay attention to these details, because if we don't pay attention to these details, then we're just really sailing in the dark, and we don't want to do that. Okay. All right. So let's go to I did cover a little bit on the New Zealand. Let's just go back to the Euro New Zealand dollar right here because that is one of the pairs that I was going to touch on. And so the question here is where we're going from here. I'm going to go to the 4-hour time frame. Here we go. So the 4-hour time frame shows us that we have a sweep of the high. All right. So this is going to be a sweep of the high. This will be our market structure shift down here. All right. So we're looking for price to change. Let me see if the 1 hour shows us something here. Yeah, I'm not even looking at that. So I'm not even looking at that as an option. Okay. I noticed that the daily range, let's go back to the daily range. This is important right here. This was the previous day. This is now obviously the previous day. And so what we would like to see is price actually trading below and staying below this daily range. If we do that, we're heading south. All right. Manipulation, heading south. All right. So that's that. Let's go to the lower time frame. So I'd like to see the market sweep this low. And by the way, this is where the patience comes in. All right. This is where the patience comes in. Let me go back to here. Let's look for equilibrium over here. So this whole move right here. All right. Where's equilibrium? Equilibrium is right here. Check this out. With this big move that we saw to the downside right here, with this big move to the downside right here, where's equilibrium? Right there. Look how price comes right up to that level there and then sells off. But not only sells off, but we see a big wick to the upside. All right. It's just unbelievable. So we can already see that the Euro New Zealand dollar has gone and equalized, which means that we should be paying attention to the possible sell-off. So here we've got a nice little rising wedge. We can see price here went ahead and confirmed. Yeah, we had a test over here. We had a test over here. We got a test over here. And so we would be looking for price to push back down to this area, then see a breakout, and then a sweep of this low right here. That's going to be the draw right there. All right. That's going to be the draw right there. So let's look at this in a little more detailed analysis here. So here we got the monthly. All right. Clearly, of course, the monthly is not closed yet, but we're looking very good. If this is how the candle is going to close for the monthly, this is going to be super cool. All right. Let's go down to the weekly. All right. If the weekly closes out like this or even lower, that's going to be super, super cool. All right. Let's go to the daily. If the daily closed out below this previous daily low right here, that's going to be super cool. Because why? Because we're going to be heading back down to this. This is going to be our draw of liquidity down here. Now, I would be slightly concerned if the market does this and then we see a U-turn, a reversal here without sweeping the low. If that happens, we're going to move higher, and this may be the draw or at least a retest back up here. We'll see what price does at that level. Okay. All right. Now, let's take a look over here. Let's look at so in regards to adding to this position, all right, we can go here to the 1 hour time frame, and the 1 hour time frame really gives us the same confirmation we're looking on the 4 hour. So because that, I'm going to go back to the 4 hour and really pay attention to this level. That's where I would like to see the market structure shift right here. And if I see that, then I'm going to start look to add. I want to add to this trade. And where's my target? Where do I want to go? We don't want to target on if the market gives me a nice structure change here. All right. Where do I want to go to? Okay. Well, I'm going to wait for price to move up. I'm going to look for a nice fair value gap, but I'm looking for price to target liquidity. That's going to be the draw of liquidity down here. There's a long ride down. Look at that. We might have about 1,000 pip opportunity. Now, if you're saying to me, well, big dog, there's 1,000 pips, that's a long time. Well, you don't have to sit in this thing all the way down. What you have to do is use this for bias and then move down to lower time frame and take intraday moves on this pair. But what you will be doing is selling, 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 baby. All right. Like Trump would say, drill, baby, drill. We're going to say sell, baby, sell. All right. Sell, baby, sell. So we're going to do that on this particular pair right here. But we're going to wait and see if we can get this price to dip below the daily range to set up the trend for the rest of the week. Let's go take a look at, there's one more pair that I want to pay attention to, and that is, I believe, the CAD Swiss. The Aussie CAD. Traders, here we go. Perfect model. If there's anything that I could say that is sweeter than wine, it would be this setup right here. All right. This is it right here. We have accumulation setting up over right now. All right. Now, just an FYI, guys, if you're not following me on Instagram, make sure you go ahead and do that. All right. Just search the name FX Big Dog on Instagram and go and follow me. And you can see that it's my channel, because you'll see a lot of shorts that have been posted on Instagram. Make sure you go ahead and check it out. And only this will be at the background. No other fake pictures or whatever it is. So the deal is this. I am pushing and I'm driving hard the idea that the market moves in three phases: accumulation, manipulation, and distribution. I'm teaching, I'm trying to educate, I'm trying to create as much education as I can to help traders to understand the markets better. Because traders, we got to understand smart money and how it operates. And you know what? For the last year, I've been trading side by side with my son Cameron, and we've been working on a strategy that is absolutely going to be extremely powerful. And that strategy is going to be used in our Operation Recovery program, because what it does is it allows us to be able to enter the market with tight stop losses and look for large targets. It's a great way to be able to recover when you're looking for 10-15% monthly. I'm not saying this is you're going to get this. I'm saying this are the things that can be achieved by using tighter stops with larger targets. But listen here, if you're thinking that you can go ahead and just place a trade and extend your take profit 10 times or 8 times your stop loss, and you're always going to make profit, no, it's not going to be that easy. All right. Because why? Because you have to understand, when is it time to enter, where is it time to enter, all right, and then where do you place a stop loss to keep tight, so that you in the right place with your stop without getting popped, and allowing it to run towards your, what I like to call, OP level, your objection point, right? And so it's these things, traders, that we're building out. And coming back to this chart right here, all right, a very, very key sort of pattern. We have accumulation, all right? We have the market moving to the buy side of the curve, giving us manipulation. We then see price moving back to its target. There's the target there. Listen, traders, if you look at the structure right here at the top, all right, I'm going to zoom in a little bit closer up on this. I want you to see this. I think it's important that you identify this. So here it is right here. If you look over here, you have the market going up, down, up, then taking out the low. There's our market structure shift. We get the market coming back up here. We're going to place our stop loss pretty tight. We're looking for a fair value gap, which is sitting at just above over there. Fair value gap, and we're looking for price to move down to this target right about there. Now, just on this setup alone, it is an 8-to-1 risk, or the 1-to-8 risk to reward. 1-to-8 risk to reward. Traders, this means that if you're risking 1%, you gain 8%. I just spoke to you, and I mentioned to you, if we had to place these trades, if we had to go ahead and look to enter these trades, how would we enter it? How would we enter it? What would we be doing? What would we be doing with regards to how we're going to be managing our risk? Where we're going to put a stop loss? Where we're going to take a profit? All right. All of those things are important. And so it's important to understand this. Now, coming back to where we are right here on this trade here, we know that when the market moves in a bullish trend, right? When we see price moving bullish, it's taking out liquidity. When the market moves south, we're taking out liquidity. Once we get to a point where the market takes out liquidity, what do we want to do? We want to look for reversal. Let's take a look over here on this bullish move going up here. Did we see anything? And again, Which time frames does the market reverse first? The lower time frames, right? You see the market reversing on the lower time frames. Here is this is and then you can see a movement right here. That's a 15. Look at the 5-minute. All right, so here we go. So price does this. Now remember, you don't have to get in. You don't have to get in on this and say, well, I can't see anything happen right here. All right. You can also go ahead and take a look at where price does this. Price goes ahead and, oops, sorry. Please don't freeze on me here. Hold on. All right, there we go. So price goes ahead and dips south, comes up here, dips south again, then it goes up. Do we have a change of structure? No, because we're looking at the highs up here at the top. But then when the market creates this high and we see price coming down here, you can see here, we got a change of structure right here. Look at this. We got a high. All right, here's the low. Then we have low, we have equal highs, still didn't break through. Then price goes down. And we have low, high, low. Here's the reversal. When price takes out this high right here, all right, once it comes back to retest this area and it doesn't sweep lower, once price doesn't sweep lower and we start seeing another reversal here, here's your opportunity. All right, this is a 5-minute time frame. Here's your opportunity. Price goes up. Look at the fair value gap. All right. All right, so price goes up, up, up. We actually go back and sweep the high right here. Now we can move it to a larger time frame to look where the sweep is. Let's take a look. So with the fair value gap sitting over here, here's your fair value gap sitting over here. Boom. So as price takes out the high, here's your fair value gap sitting right here. All right, there it is there. Boom. What do you want to do? We want to go ahead and enter inside this. We want to see if we can get it down to about midpoint right here. All right. This is consequent encroachment, which is the middle point right here. If we want to get it in right here, place our stop losses down below this candle. This candle that's causing the insufficiency right here. That's the low right here. We're going to put a stop loss right about there. Okay. And we want to let the market ride. Now, if that's where we're entering and that's where we're going, then this is what it looks like. This is the entry point right here. That's the entry right there. Here's the stop loss placed over here. And this is where price is trading at there. There's the high. This is a 1-to-5, almost a 1-to-5 risk-reward ratio. And what are we looking for? We're looking for price to sweep the high here at the top. There's the high. Are we there yet? Sounds like the Smiths, all right? No, we're not there yet. So we're looking for a 1 to 5.2. That's the risk-reward ratio right here, 1 to 5.2. We're looking like it's going to push up a little higher. All right, it's going to push up a little higher. Is that where price can move to? No. Price can move up higher, so we can actually chase after this target. Why are we chasing after that target right there? Well, we're chasing after that target right here because we have accumulation, we have manipulation. Here, yep, we have it on the 15-minute time frame. We have accumulation, we have manipulation. We saw the entry point right here. We're in this trade. We're now moving in this direction. We bought in over here at this fair value gap. We're looking for price to move up towards this area. When it moves to that area, what is our risk-reward ratio? There it is right here, my friends. All right, 1 to 12.4. All right, so that is our risk-reward ratio, 1 to 12.4. And that is a lie. Got you there. It's 7.1. So our risk-reward ratio right here is 7.1. So how would you like to enter trades and get your 7 to 8 risk-reward ratio? 1 to 7 to 8 risk-reward ratio. Very cool, right? Now, think about it this way. A trader, if you're a trader and you had lost, let's say you've got $50,000, right? Got $50,000, and you've lost $25,000, 50% of your margin, your equity, and so you're down $25,000. How do you make $25,000 making 1 or 2% a month? Look, if you got $25,000 and you're making 1 to 2% a month, let's just do the math. Let's do the math right here, and let's see what this works out to. So here we go. 2% of $25,000 is going to be $500, right? $500. How many months, if you're going to make 2% a month, how many months do you have to go to make $25,000? Well, take $25,000 right here and divide that by 500. 50. 50, that's 50 months divided by 12. You're looking at 4 years. It's going to take you 4 years to recover your $25,000. All right? Listen here, I don't know about you, but that's freaking long time. So if you go over here and you put it into the spreadsheet right here, and let's say you're making, if you're chasing after let's go here and let's say you're chasing after a risk reward ratio. Let me try and see if I can change the percentage here. Strike rate percentage here. I want to change the gain here. I think what I got to do is change this. So gain per trade. Nope. I'm going to drop this down to 100. Let's see if it changes the percentage here. Let's go to 200. All right, 3%. Let's go to 150 or 125. All right. Let's go to 150. 150 right here. All right, there we go. Just 2%. I'll go 175. Let's go real. 175. All right, so 175, we're at 2.5%. All right. At 2.5%, let's go ahead and put that to 0. All right, let's go put that as 0. We put no money in, 0. And let's say we're starting off with $25,000. We're trying to make $25,000. That's what we lost. We got $25,000 left. We're trying to make $25,000. And how long is it going to take us? Look at this. All right. Our account size has got to go to 50. Where's it going to go? 50,000. Let's see here. Now, if we trade with a cumulative, all right, if we do a cumulative, which means if we do compounding interest, all right, and we go ahead and as our account grows, we go ahead and increase our lot sizes at 2.5%, then it's going to take us exactly 30 months. So 2.5 years. It's going to take us 30 months to go recover our $25,000, right? 30 months. But now, what if we did something like this? What if we're chasing after a risk-reward ratio? Let's say a risk-reward ratio is not 1 to 7.5. What if we go ahead and we trade, let's go ahead and trade 800. Oh, no, let's go 600. Let's get conservative, 600. If we look for trades that are 1 to 6 in risk-reward ratio, we're making 16% per month. All right, if that's what and I think we've even got a loss ratio here. Win-loss ratio is 6, yeah. So we're winning 6 out of 10 trades. So we're losing 4, we're winning 6. So win ratio is up, and we're looking at a risk-reward ratio of 1 to 6. And if that's the case, meaning we are losing some trades, but we're also gaining more, then we're looking at about a 16% gain. If we're looking at a 16% gain, placing around about how many trades we got here? Let's see here. With the trades, win ratio 16. Yeah, let's see here. Win ratio. Where's my trades here? One currency. Number of currency pairs 13. Trades per currency pair 1. Oh, so 13 trades. That means traders we find one trade out of 13 pairs. So 13 trades per month out of 13 currency pairs. Right, or at least out of 20 currency pairs, we only pick up one trade, we're making 16.25%. At that rate, where are we going to, how quickly are we going to get to making $25,000? We'll check this out. 6 months. 6 months. 6 months. And what are you doing? You're risking how much per trade? 0.5%. So traders, what you can do is, instead of putting cost averaging, you want to go ahead and use stop losses, no problema. Use stop losses, 0.5% risk. Look for these setups on 28 currency pairs. Find only 13 of those trades per month. All right. And it can be anything from the 15-minute time frame all the way to the 4-hour to the daily. Daily normally will give you your bias. Your 4-hour, 1 hour, and the 50-minute time frame will be your entry points. Maybe 30 minutes. So 30 minutes, 1 hour, and 4 hour. And that's pretty much what she wrote. All right. So traders, again, we'll cover more of this a little later. But make sure you guys join. Make sure you guys join tomorrow evening, and of course on Wednesday evening, I will go back into the charts again, go break it down, and we'll go ahead and take a look and see exactly what is going on. All right. With that being said, traders, have a fantastic evening, and I will see you guys next time. This is FX Big Dog signing off.